Hi, very good afternoon to all of you. Everyone wants to know what's going to happen in this market. I'm also one of them. We are geared towards a bull market or a bear market, but we have not been taught how to play kangaroo market. ये हम लाइफ में पहली बार सीख रहे हैं. If we come to the global economy, it can be best summarized by 3 Bollywood dialogues. हमारी हिंदी फिल्में बड़ी अच्छी तरह से वाक्या बयां करती हैं. बहुत समय पहले एक नाना पाटेकर की मूवी आई थी कॉल यशवंत, जिसका एक डायलॉग बहुत फेमस हुआ था कि एक मच्छर आदमी को हिजड़ा बना देता है. फंड मैनेजर को ट्रंप साहब भी कुछ ऐसे ही कर रहे हैं. इन्वेस्टर्स का भी वही हाल है. एंड वी कांट इवन से दैट we were not warned. Chandra Barot made a movie. Unfortunately, वो समय मेरी माँ ने मुझे स्कूल भेज दिया था, तो मैं पढ़ाई कर रहा था और मूवी नहीं देखी. बाकी उन्होंने तो कहा था डॉन को समझना मुश्किल ही नहीं, नामुमकिन भी है. In this environment, obviously, no dialogue is complete without referring to Dhurandhar. डॉन घायल है, इसीलिए घातक भी है. Essentially, the whole market and the geopolitical is around the fulcrum of Trump. And as fund manager, we are geared to predict rational behavior. How to price in irrationality, ये अभी हम सीख रहे हैं. Normally, such kind of cartoons were attributed to emerging markets. Now, whether there is truth or not, but many people believe kangaroo market is driven by the position taking by the people in power in the United States of America. Why do we care about oil? Because it's the base material for many industry. Recently I went to hospital hoping that यहाँ पे कोई oil की Middle East की बात नहीं करेगा. In the MRI scan the technician said कि अच्छा हुआ साहब आप जल्दी आ गए, हीलियम की शॉर्टेज चल रही है, नेक्स्ट वीक शायद MRI स्कैन नहीं चलेगा. To link MRI scan to helium shortage courtesy Middle Eastern war, इतनी रिसर्च तो हमने नहीं करी थी. What is important is availability as well as price of oil. About 20 million barrel passes through Strait of Hormuz. Nowadays, the traffic has dropped to as little as 10%. There are two alternatives. One, east-west pipeline in Saudi Arabia, which carries 7 million barrel to the Red Sea. And second one, UAE-Oman pipeline, which carries about 1.6, 1.7 million barrel. Both of them are operating near 100%. And yet the world is facing a shortage of about 10 to 12 million barrel of oil per day. It's difficult to predict Trump, but at least this is what markets are pricing in today. A stalemate is a victory for everyone. US, Israel will say, look, we have taken out nuclear capability of Iran. Strait of Hormuz is open. Oil prices are back in double digit. And hence we are victorious. Iran will say, our regime continues. We have defeated both US and Israel together. And maybe they'll continue to collect toll on the Hormuz passage of traffic. Undoubtedly, Iran will become more conservative. It will be ruled by less competent people as top leadership have disappeared. and they will probably depress internal dissent even more strictly. How do we see the world once this war comes to an end? Independence on energy and on defense becomes critical. Two big themes which will develop not only in India but also rest of the world: energy independence and defense independence. We see government already taking steps to build India's energy independence. The needle is not going to move in a year or two. It will take a decade or two. But the work is going on. One, to push coal mining so that thermal power plants run. New thermal capacity will be added. Solar rooftop will be pushed. Today there are about 30 lakh houses which are making money by selling power. Tomorrow they could be 3 crore and day after tomorrow it could be 30 crore. Solar power generation also will get support, but that without battery storage solution is not appropriate. India is already trade surplus, power surplus on daytime. We need that power to be stored so that it can be used in the night time. Multiple options are available. One is pump storage. You take the water up using daytime power and bring it down in the night to run your turbines. Second is normal battery storage, which is driven more by lithium. Lithium is in short supply, especially from India point of view. So we have to focus and invest for sodium-based solutions. That solar generation will also get supported by nuclear power. We have crossed to the second stage of converting uranium to plutonium. Now we need to figure out how to run nuclear power plant with thorium, which we have in excess supply. Second stage of fast breeder reactor was important. That we have cleared. Only the second country in the world to do it. Now third stage is relatively easy. Hopefully we should be able to manage that. That generation of power will be used for replacing petrol diesel engines with electric and hybrid. But their critical thing is rare earth. We can't move from dependency on Middle East to China. That will be moving from fire to frying pan. So we need to figure out a way, how do we make EV motor without rare earth? Or how do we mine and process our own rare earth reserves? The second shift will be from LPG to piped natural gas and induction. Induction carries health hazards of electromagnetic waves. We can't be exposing a lot of Indians to that kind of risk, so we need to figure out a solution for that. But overall, electrification of India will become a big theme, and already government is working on the same. The second thing will be asymmetric warfare. We have seen how Ukraine took on Russia, how Iran is taking on US and Israel together. There will be focus on development of asymmetric warfare, which will be made in India or invented in India. These two themes will be multi-decade theme for investors. Of course, there will be cycles of going up and down, but those two themes should work on a longer period of time. In 2008, subprime crisis came and hit us. Lehman Brothers, Bear Stearns, AIG disappeared. It all started with defaults on housing loans. A similar storm is gathering on private credit in US. These are large market like subprime. They are opaque and illiquid like subprime. As of today, consensus is that this will not go out of hand and we should be able to manage it. But do remember, on Friday in Mumbai, Lehman Brothers launched their office at CJ Towers. Who's who of finance was gathered over there, and the top management of Lehman Brothers assured us that there's no need to worry. Saturday, Sunday चैन से सोए, मंडे सुबह ऑफिस जाके पता चला लीमन उड़ गया था. Subprime did came as a shock. People have learned from that, so hopefully private credit shock will not be as heavy. But keep a watch over here. The third challenge for the world will be, what will China do? They have been keeping a yogic silence. Maybe they are following the edifice. When your competitor is making a mistake, don't disturb him. Today, Taiwan exports more to US than what China is exporting. US is stretched. Their ammunition, as per some sources, are running low. They have even moved anti-missile batteries from South Korea and Japan to Middle East. Will that excite China to do something on Taiwan? If that happens, we have a serious problem on chips, as some of the top-end chips are heavily concentrated at TSMC in Taiwan. TSMC is a company whose weight in MSCI Emerging Market Index today at 13% is more than whole of India put together. So that kind of large company sits out of Taiwan, and God forbid something happens, there will be consequences. What's the silver lining in all the dark clouds? The market is expecting crude prices to go down to $80 handle by year end. It changes every day, but the direction continues to remain downward sloping. If oil comes back to $80, we will have pain, but affordable pain. But if oil remains in triple digit, it will be unaffordable pain. A simple back of the envelope calculation. We import roughly 5 million barrels of oil and gas. Our budgets were prepared at about $65 a barrel. Right now our run rate seems to be around 100. That's $35 per barrel extra paying every day on a 5 million barrel import. Ease of calculation, $30 into 5, $150 million every day. 10 दिन का $1.5 billion, महीने का $4.5 billion. 100 रुपए से राउंडेड ऑफ कर दो, 45,000 crore is the cost of every month. मार्च अप्रैल 90,000 crore तो लग गया है. If we run that for a longer period of time, there will be consequences. Overall, Indian economy seems to be doing well. However, unlike other countries which have taken corrective action to overcome this Middle Eastern crisis, we are right now in denial. Maybe it's driven by state election, and post-state election we will see actions being taken, including increase in petrol diesel prices, requesting citizens to be wise in spending. A country like Korea, which is 15 or 12 times richer than us in per capita GDP, they have given 15-point advisory to citizens to save energy. We haven't issued anything yet. Undoubtedly, we are as vulnerable to oil shock as South Korea is. In our opinion, India is in Chakravyu right now. Oil impacts across the spectrum of economy. You pay $4.5 billion extra every month for oil and gas today. That widens current account deficit by close to $50 billion a year. Your rupee comes under pressure. You pass $65 to $100 to consumers, inflation goes through roof. Interest rate has to be increased to manage inflation. And a combined effect will be on GDP, where GDP undoubtedly will come down. This time oil prices are increasing at a time when we are vulnerable from a market point of view. On interest rates, RBI has almost come to an end of their rate cut cycle. They don't have rate cut ammunition left to support growth. And now inflation is inching up. On rupee, RBI is $70 billion short in forward market. आपने फ्यूचर में डॉलर के सामने रुपया बेच दिया है. And on top of it, now you have to pay more in current market for import of oil. Corporate profitability was hit because of labor code implementation. This quarter it is getting hit because of rising energy prices. FPIs were sellers of Indian equity because of valuation concern. Now they are selling more because of our vulnerability to higher oil prices. GDP was coming down on a higher base of 7.5%. With this shock, the fall will be more. So we were vulnerable, and on top of it, this is coming and hitting us. One more thing which is worth keeping in mind, 90 lakh Indians work in Middle East. Their safety is our priority. They also remit $50 billion remittance every year. Already in Middle East, especially in hotel and tourism sector, salary cuts, job losses have started to happen. Next year, even in remittance, there could be some drop. Against that, the only silver lining, we are sitting on still $700 billion of reserves. We are able to source cargo from wherever it is available, Russia, Venezuela, Iran itself, Africa. And our oil intensity of economy has come down. In 1990, when the Gulf War began, we went down so much that we had to pledge gold to raise foreign exchange loan. With $700 billion, we can afford to pay for higher price of oil. But undoubtedly, it will be painful. And pain could be higher because our ability to take corrective action is limited because of state election. There is a saying which says, in famine you have Adhik Mas, additional month, or troubles come in battalion. We are also going to witness El Nino, which will impact monsoon. And this year's monsoon prediction by both IMD and SkyMet is below average monsoon. Could there be some relief? One, El Nino is likely to impact August and September rain. July rains are most critical for our food production. Hopefully June, July rains will be normal. August, September देखी जाएगी. There is something called Indian Ocean Dipole. It's positive for the month of April. If it remains positive even in August and September, we will see significant deceleration in El Nino effect. We really have to pray. If June, July rains are not good enough, then IOD should remain positive in August and September. That will negate the adverse impact of El Nino. If both this don't work, then we have to pray for good dispersion. Many a times dispersion is far more important than quantity of rain. So there is some hope, but there is a concern. If we overcome monsoon, there is a bigger concern, which is artificial intelligence impacting India's IT industry. 4 crore Indians directly and indirectly work in IT industry, generating $350 billion FX revenue. That gives us ability to pay for imported oil and many other things. And as of today, jury is out whether AI is opportunity of lifetime or a risk of a lifetime. 5 years ago, a global telecom company's CTO told us that from their 12,000 employee call center in India, over 5 years they'll have 0 employee left. Today they are employing about 2,000 people and still doing work of 12,000 people. This gives you fear. But when we go and meet BPO companies in listed space, they have not only retrenched anyone, but also recruited more people. Because leveraging AI, they are able to now service not only English-speaking population, but also French, German, Polish, Japanese, Italian-speaking population. Those BPO companies who couldn't leverage technology, of course, they have lost out. But there are equally smart companies which are leveraging technology and grabbing business from Eastern Europe and Philippines. How will this shape up? We are not very sure. But like we have a view on geopolitics, we are having a view on the potential development in AI. India is late entrant in making semiconductor chips. So IT hardware opportunity, we can safely say we have missed. In LLM, we have launched Sarvam, but that's not comparable to ChatGPT, Claude.ai, Grok, or Gemini. Where we have natural advantage because of our service-oriented mindset and plenty of engineering skill, that's apps on the LLM. There are few bright spots. IIT BHU alumni has created a voice AI called Luna. There's another which has created voice AI called Maya 1. Both these apps are today closest to human voice. They are emotive in appeal. And if we can commercialize them and scale it up, the world could be a buyer. If we can develop many more such apps, there is hope for Indian IT industry. We did launch Sarvam at the Digital Summit All the LLMs launched by US and China, there is fear of backdoor, there's fear of secrecy of data. If we can position Sarvam as LLM without backdoor for the global south, there is opportunity that it may become something worthy of paying for. On top of it, if you create apps which are based on Sarvam, again you create a virtuous cycle. Finally, we believe our companies are focusing on enterprise AI market. Every organization around the world has to deploy AI. But to deploy that, you require data, and data is all over the place. You will need a company or humans to ensure that data is arranged properly, selected properly, cleaned up. LLMs are applied, outputs are generated, that output is secured. Otherwise, your competitor will know more about your company than you know. You'll have to ensure that that output is accessed appropriately, it's updated, an organization is able to generate return on equity on the AI investment. At this point of time, I believe, again not with very surety, there will be winners in IT industry and there will be losers. At this point of time, mid-cap IT companies are able to adopt to the evolving situation faster, and they are still showing 20-30% volume growth and value growth. The large cap IT companies, many of them are behaving like dinosaur. So there will be winners, there will be losers. Hopefully, as fund manager, will be able to pick up more winners and less losers. In this entire thing, where does India growth story stand? This time I have focused more on the present and future concerns. But I don't want to sound absolutely negative. What gives us confidence about India growth story is retention of talent. One of the entrepreneur whom I met couple of months back, and his story is truly impressive, I just want to put in front of you. Srinath passed his electrical engineering, joined ABB, worked in sales department. Few years got bored, went to US, did his MBA in Columbia, worked on Wall Street managing fixed income on a quantitative portfolio basis, made money, got bored, enrolled for a course in aerospace, and 10 years back decided to come back to India for pursuing childhood passion of aerospace. Entire sector was reserved for government PSU. Worked hard, failed, rebuilt. Today, he runs a company called Agnikul Cosmos. They have printed world's largest 3D rocket engine. India doesn't know how to make a fighter jet engine, but the world's largest 3D printed rocket engine is done by an Indian company. They print rocket engine in 3 days. They are able to launch rockets for low Earth orbit, LEO, at a cost which is competitive or better than most of the world. We have seen how SpaceX caught the falling booster and fuel tank and made it reusable. Agnikul Cosmos will probably be the second company in the world to attempt the same. Very recently, they fired multiple rocket engines. This gives them modular capability. You want to send more satellites, put more engines. You want to send satellites in higher orbit, put more engines. The way they are progressing, probably they'll set up Uber of satellite launches. After your order, in 20 days, they'll be able to provide a launch vehicle. And the best part, their rockets are launched on aviation turbine fuel. जिससे प्लेन उड़ता है, उसी से वो रॉकेट उड़ाता है. There is no other company in the world which is doing that. And to my surprise, I discovered after this kind of stellar achievements, they are not the front runner in private space tech industry. There are bigger and better companies from India which occupy that space. Someday I'm sure I'll be able to meet them and share their story, which will be even more impressive. India doesn't have problem of talent. It's just that we never had the ecosystem to support that talent. As we speak, in India there are 3 companies, 2 startups, 1 listed company, which is trying to make motors without rare earth. 2 steps taken by the government. These are announcement. It should get converted to action on ground. 1 RDI fund, 2nd Anusandhan fund. Both these funds will provide capital to serious research and innovation. And if this can be leveraged by local talent, we could be in the game of higher growth. Undoubtedly, central government has taken a lead on developing infrastructure. In last 12 years, we have almost doubled our infrastructure across road, port, power, telecom, airport, metro. Long way to go. But today, Mundra port runs more efficiently or as efficiently as major ports around the world. Is there a inherent strength in Indian economy which we can leverage when crisis comes? In the 90s, gold came to save us. In future also, the gold lying with Indian household could be a savior. We are the only country in the world where about 125 to 150% of GDP is locked in gold, and most of it is in Tijori, safe deposit locker. If push come to shove, we will be able to monetize the same. There is no need right now because we are sitting on $700 billion reserve. But if government is innovative without offending Indian housewife, they will still be able to monetize part of this massive reserve. We get 2% of our GDP by way of FDI on a gross basis, and 125 to 150% of GDP is lying locked in. If we can monetize 2% every year for next 75 years, we won't need any foreign capital at the current run rate of deployment. Obviously, we want double booster Let global and local capital come together to create faster growth. How do we convert this into market? Undoubtedly, small, mid, large, everything is corrected in this yo-yo market. Sectors which had taken a beating, like IT, like healthcare, have fallen less, but other sectors have corrected almost similarly. This correction is driven by FPI selling. Last year they sold close to $19 billion. In first 4 months they have already sold $13 billion. This FPI selling is driven by a couple of things. One, other markets are doing far better than India. Brazil, Taiwan, China, Korea. Our valuations were looking higher in 2024. And there is no AI play in India which global investors right now want to invest into. Courtesy the correction over last 2 years, now we are no longer trading at a significant premium to emerging market peers. We are now below our historical premium. Markets are neither cheap like they were in COVID time, nor they are expensive like they were in 2024 with the benefit of hindsight. They are fairly valued, neither cheap nor expensive. This year's earnings growth will be revised downwards from 10% to maybe 4-5% because of rupee depreciation, because of Middle East crisis, and because of one-time impact of labor code implementation. If oil remains around 80 handle, then there is a reasonably good chance that corporate earning can bounce back after 2-3 years of decline to double digit, whether it is 16, 15, 10, 12, all depends upon what is the severity of Middle Eastern crisis. But earnings can recover and support the market. One safe assumption based on past experience, market bottoms out well before war comes to an end. In Kargil, when the war was declared and when the war ended, market was far higher when the war ended and made the bottom when the war was declared. Russia-Ukraine war is no different, and Gulf crisis was also similar. Maybe market has already made the bottom, and tomorrow there could be a good news coming from Islamabad. To generate higher return, we need FPIs to invest. The base case remains that FPIs will be a seller. While valuations have corrected, they are not cheap. There is no AI investment play. And we continue to remain vulnerable till such time oil comes down. We need some amount of luck for FPI flows to reverse. One, we have normally seen when dollar depreciates like it did between 24-25, people take money out of America. This time people have invested $4 trillion in this time period in America. Trump साहब का खौफ सबको है. At what point of time economic rationale takes over? If history repeats, where dollar depreciation results into outflow from America, undoubtedly we could be one beneficiary. Second, today the big gorilla in emerging market is China, Taiwan, and Hong Kong. One Taiwanese company, TSMC, today carries more weight than whole of India. When people are withdrawing money out of America, it should not go to China, Taiwan, Hong Kong. It should come to us. Why will that happen? Well, in the last 2 decades, Chinese markets have gone up 5 times and come down 5 times. छठी बार भी ऐसा ही हो जाए. In this two situation where investors withdraw from America and Chinese market don't become their option number one, India can receive FPI flows. Otherwise, there will be outflows. What do we conclude out of all these things? The long-term growth story remains good. Short-term, everything is dependent upon Trump. It's not a bear market, it's a kangaroo market. So you will get your opportunity to invest. The investor expectations are still anchored around last 5 years small and mid-cap return of 15 to 20%. But if you look at history, by and large, returns have remained in high single digit, low double digit. At current level of inflation, valuation, and geopolitical scenario, generating 15-20% looks difficult on a sustainable basis. A more moderate return will be realistic. Gold, silver continues to generate a lot of attention. Today, percentage allocation of global central banks' reserve in gold is exceeding US Treasury. This has happened after a long gap, which means central bank buying of gold will slow down a little, and hence we'll have to moderate return expectation from gold also. In the wartime, normally gold prices go up. This time they corrected and then recovered a little. The correction was driven by selling of gold by central banks of Russia, Turkey, Bulgaria. And the recovery was also driven by buying of Central Bank of Poland and Uzbekistan. Gold prices are swinging by central banks' activity. The investor behavior also moves in line with gold price move. ETF buying in February and March corrected sharply as gold prices became volatile. The history of gold is price rise, correction, consolidation, and the next move. The current price rise is sharp, but that is the phase driven by central banks of the world buying gold. Our outlook on gold continues to remain bullish, as we believe central banks will continue to buy gold, and the world doesn't have enough gold to meet central bank demand and jewelry and consumption demand. No new gold mines have come. Existing gold mines have become commercially unviable to exploit. Supply remains tight. Demand remains strong. No price on guessing where gold prices will move. However, this positivity on gold comes with some caveat. There is no intrinsic value in gold. It's only emotional value. Hence, please put a cap as a percentage of portfolio. 5, 10, 15, whatever you think is appropriate. but don't put 100%, 50%, 75% in gold as a portfolio. The returns of past are unlikely to be repeated unless central bank go berserk. Unlikely that they will be like that. Do watch what central bank activity is. I'm sure Rajul and Sapna will keep you informed. Like artificial lab-grown diamond came and hit natural diamond prices, keep a watch on lab-grown gold. There are two projects, one at CERN where they converted lead into gold. That's of no commercial consequences because costs were very high. The one which we are keeping a tab on is nuclear fusion process, where mercury is converted into gold. Even in our Puran, when we talked about Paras money, that was through mercury. Obviously, this is not a risk like lab-grown diamond right now, but this is something to watch out for. This is official front-running of central bank activity. We are running speedboat, they are running oil tanker. We have to move ahead of them. If I have to summarize, short term, Trump Saab will determine what happens to economy as well as market. Undoubtedly, India is in a tight spot and we have dig a little hole for ourselves by not responding because of state election in time. Even if on Monday we hear positive, even if on Sunday we hear positive news from Islamabad, the supply disruptions will take time to settle down. There has been damage to oil and gas infrastructure in Middle East, especially Qatar, Oman, Kuwait. And it will take time to stabilize the supply chain. In fixed income, we expect interest rates to go up a little. And hence, it's time to look for performing credit AIF kind of higher carry product. These products are more suitable from a fixed income point of view. Gold bullish on a longer term basis because of central bank buying, but subject to a cap on the portfolio. Equity ups and downs, but longer term moderate return with some short term volatility. If FPIs turn buyer because of exodus of investors from America and not going into China, then returns could be higher. Large and mid caps looks appropriate. They are trading near or below their historical average. Small caps are still at a marginal premium. Banking, as the FPI selling has brought down valuation and fundamentals continue to remain good. Consumer discretionary like auto, as the GST cut induced demand is still continuing. Cement, the GST cut of 28 to 18% was passed on to consumers under the watch of government. Now some of it will flow back to the manufacturer's balance sheet. Hospitals, consolidation happening by private equity players. Hub and spoke model is improving efficiency. These are some of the sectors which we believe should outperform the market in the days to come. This is all I had to share, but happy to take some questions.